Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Empire Fintech Conference in New York City. Joining us for this segment, we have Nami Baral. She's founder and CEO of Niural. We're going to discuss the evolving environment post-SVB, especially for payroll, where there is no room for error. It is great to see you, Nami. Welcome back to Trade Talks.
Thank you so much. Thank you so much.
And last time you were on the show, this was during the pandemic. During 2020, during the height, you went through a successful acquisition, and you're now building Niural from the ground up. What was the inspiration behind starting Niural?
Yeah, absolutely. So, even when I was building my last company, it was in the financial technology space, and we're helping a lot of consumers with AI-led debt-related negotiations. And during that time, what I found out was, for every financial technology startup and consumers, payroll and their direct deposit is the most important payment you can ever talk about, think about, deal with, right? But the companies that are serving payroll are actually some of the most antiquated dinosaurs in this industry. And what I realized is, especially because of the pandemic as well, the way the global landscape for how the workforce has changed is, it has changed drastically, and there are new kind of requirements for this new paradigm shift in the way global workforce is currently set up. So with that in mind, I essentially set out to build a company that can actually integrate modern money movement rails and truly build something generational for the next 100 years of payroll, rather than dealing with the last 100 years of payments.
It's so interesting. We take it for granted. We get paid every 2 weeks on Fridays. In New York, it looks like one thing. In Stockholm, it looks like something else. Philippines, They have a whole different set of rules. For a global company, you just take it for granted. Why is it important for U.S. companies to have access to global talent, and how does Niural solve that problem?
Yeah, the world has already become so much more global, and post-pandemic, you have to seek talent wherever it is, right? And especially if the U.S. Employers wanted to be competitive around the globe, right? Especially with the advent of AI, you have to find increased productivity and increased talent wherever they are. So you have to go where the good talent is. And then additionally, the macroeconomic conditions that we all find ourselves in currently, that has kind of forced companies to look for lower budget but still high quality alternatives. And for that, you move across borders, right? So when companies have to do that, find talent elsewhere, they also need to adhere to increasingly complex regulations related to labor laws, HR, payments, cross-border money movements, all of that. And that is exactly what Neuro is solving. What we have done is we have an AI-powered platform that essentially allows you to automatically comply with the world's regulations. And then second, we have built our money movement rails in such a way, it is like a very optimized, efficient stack, which helps us bypass intermediaries, and we can offer much better FX rates for your international workforce. So you, the employer, are paying less to pay the same amount to your employees around the world, and your employees get to keep more of their hard-earned income. And it is all done through one automated platform that handles payments, HR, compliance, contracts, taxes, accounting, everything in one place.
What differentiates your solutions? I know you talk about Niural as a compound company. What does that mean?
Yeah, so compound platform is basically my way of saying that, essentially what we do is we replace 6 to 16 different tools that companies are using today with our single platform, right? Because payroll is inherently complex. It is not just, dealing with, direct deposits or checks, but it is also dealing with a lot of regulation, compliance, labor laws, and things like that. So you cannot just build a payments company when you're building global payroll, right? You have to build a lot of different compound features into it. You have to add a lot of features into it. It has to handle automated tax compliance. It has to generate W-2 1099s. It has to handle GDPR and data processing addendums all around the world. It has to handle local government filings across multiple jurisdictions. So all of those things, when they're put in one platform, it becomes a very compound platform, right? And our differentiation against legacy or otherwise, any kind of player in the ecosystem is, number one, it is fully automated by using AI. My previous company was in the AI space, and I built this company with AI integrated into every core component of the platform. That enables us to provide the scalability that other companies may not have. So we can serve 5,000-person companies as gracefully as we serve 50-person companies, right? Because we can automatically scale them with AI. The second component is the way that we have built our infrastructure, from money movement to compliance to contract generations. It is a modern tech stack. We have built a lot of redundancy into our platform, right? We talked about SVB. What became evident during the SVB crisis was a lot of payroll companies actually do not have the ability to change partners overnight, right, because they do not have that redundancy. We have built redundancy into all parts of our stack. So scalability and the infrastructure and the modern tech stack that we have built really gives us that competitive edge.
It's interesting, when you sold your first company in 2020, the fundraising environment looks so different than it does right now. And this is even before SVB, with valuation resets coming back in, liquidity, the cost of capital becoming more expensive. How do you see fintech evolving post-SVB, especially to your payroll? You have to get it right.
Yes.
There is no room for error.
Absolutely, absolutely. One of the things that I always found interesting, even when I was doing my last company, was when there's markets, when there's exuberance happening, right? A lot of the founders and investors sort of lost their way, right? They started thinking about growth at all costs, and nobody was really thinking about profitability. Now, one of the benefits of me being a female founder, we are all very capital efficient. We tend to think about capital efficiency and profitability from the get-go, because we don't get access to the same kinds of, kind of funding environments as maybe, another male founder in a similar position may have, right? So from that perspective itself, even when I was building my last company, I always built it with the idea of building a profitable, really good company. And so we're profitable with our last company as well. And now profitability is actually sexy, right? Now actually the market rewards you wanting to build a generational company, you wanting to build, a company where you can control and, kind of be the master of your own fate, because if you have a good business and if you're profitable, then you have a lot of control in your hands. And so what I say to a lot of founders these days who may be just starting out or who are in the fundraising space is, think about the financial technology industry not as an industry that rewards growth at all costs anymore. You have to build something of value, but you have to build something of value that is valuable in itself as a business. And if you have those two items, building something of value and you building a valuable business together, then the rest of the market will, essentially follow you and reward you.
I'm so glad you brought that up, because it feels as if the companies or the founders got the blame, where valuations were being assigned, VC was just throwing money at them. There was so much liquidity in the system, but I also think the industry, particularly when it comes to whether it's private equity or it comes to VC, they also have a responsibility to counsel and mentor these young management teams, particularly founder CEOs and so forth, where I just feel like the experts in the room almost failed younger fintechs because there was no mentorship. In a way, this valuation reset had to happen, not just from assigning multiples, but teaching founders about governance, about profitability, about a clean balance sheet, about risk management. So in a way, I think this almost had to happen.
Yeah, I agree.
But what about the future of work? How do you see it evolving? Do you think the distribution of workforce will revert back when younger generations start coming into the workforce as COVID becomes a memory?
Yeah, so absolutely. During the pandemic, obviously there was a lot of distribution happening. Everybody was working remotely from multiple different places. And while that was necessary at that time, I think the distribution will take a slightly different approach now compared to the pandemic, right? Because there's something to be said about in-office worker productivity. There's something to be said about everybody being in one room and tackling problems together. And so now, as we see, more and more companies laying off people and becoming more lean in their, in their operations, they will want to have more in-person meetings and in-person, work that just increases worker productivity in general. That said, there is no alternative to actually having a distributed workforce strategy, because good people are everywhere, right? They're all around the world, and you do need access to great talent more now than ever and in lesser cost than ever, right? So what I think will happen is it's still going to be distributed, but it's going to be distributed locally across multiple hubs around it, right? So you may not have 50 people in 50 different countries, but you will have 2 or 3 hubs in multiple countries, and within those there's going to be local offices and in-person presence across companies. I think that part is something that we'll continue to see more and more kind of reverting back to the mean, but still in a distributed way for many companies.
All right, now I appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much, Jill.